Welcome to today's market report. European stock markets traded mostly lower on Monday, consolidating after recent gains amid rising COVID-19 cases globally. DAX future traded 0.9% lower, CAC 40 fell 0.5%, FTSE 100 dropped 0.6%. There were, however, significant outliers, with stock technology index hitting another all-time high, and UK sports gear retailer JD Sports Fashion rising 4.5% to an all-time high after reporting a strong Christmas trading season. Many European countries are battling a surge in COVID-19 cases following the emergence of a new highly transmissible strain of the virus, racing to vaccinate their elderly, the most vulnerable members of society. Cases are also increasing globally, with mainland China seeing its biggest daily increase in more than 5 months, the country's National Health Authority said on Monday. This has prompted a lockdown in Shijiazhuang, the capital of the province of Hebei and the epicenter of the new outbreak. China had recovered better than any other major economy from the COVID-19 hit, with the manufacturing sector in particular thriving as global consumers switched demand to often Chinese-produced goods from locally produced services. Losses are likely to be limited following the solid start to 2021, as investors remain focused on the prospect for additional fiscal stimulus in the US after a Democratic sweep of Congress. This remains the case even after the violent scenes on Capitol Hill last week that continue to reverberate. The economic data slate is largely empty on Monday, while in the corporate sector, British land stock fell 1.8% after the UK's largest commercial landlord reported a drop in rental collection in December, with only 46% of retail rents paid in full and on time. Swiss healthcare giant Roche stock rose 0.4% after receiving EU approval for its influenza treatments. Xofluza and Sanofi stock rose 0.7% after agreeing to buy UK pharmaceutical group Kymab. Oil prices weakened on Monday amid concerns of declining fuel demand following a jump in new COVID-19 cases in China, the world's second largest consumer of crude. Crude futures traded 0.7% lower at $51.87 per barrel. Brent contract fell 0.9% to $55.50 per barrel. Gold futures rose 0.7% to $1,848.80 per ounce. On the FX front, GBP/USD lost critical support at 135.45 as the cable tumbled down due to Fed-related dollar strength and the UK's dire COVID situation, ramping up of Britain's vaccine campaign and further financial support could boost sterling, but Monday's 4-hour chart is pointing to further losses for the pair. Some in Westminster are ruling even tougher limits, while others suggest stricter enforcement. In any case, the economy is undoubtedly struggling and sterling is suffering. Support may come from the government. Chancellor of Exchequer Rishi Sunak is set to speak in Parliament later in the day to discuss the state of the economy and potentially offer more fiscal relief. The UK is ramping up the rollout of vaccines, setting up special immunisation centres. Britain approved 3 jabs from Pfizer, BioNTech, Moderna and AstraZeneca. The UK administered vaccines to only around 2% of the population despite the earliest start in the Western world. That may be better than European countries, but frustratingly slow given the number of doses at hand and mounting pressure on hospitals. Support for cable awaits at 134.25, which was a cushion in late 2020, followed by 133, a stepping stone on the way up. 134.45 now turns from support to resistance. It is followed by 136.40, a swinging high last week, followed by the recent peak of 137.05. Sellers remain in control of the sentiment around the European currency, dragging euro-dollar to new 3-week lows in the 121.65 band. Euro-dollar loses ground for the third session in a row at the beginning of the week. extending the negative mood that emerged in the second half of last week. In fact, the rebound in the demand for the greenback stays underpinned by the bounce in yields of the key US 10-year note to levels beyond 1.12% during early trade, an area last visited in March 2020. In addition, the relentless advance of the coronavirus pandemic in the region poured cold water over expectations of a strong recovery, helped at the same time by the slower than expected pace in the massive vaccination campaign in the old continent. The dollar index was up 0.3% at 90.335 and is now over 1% higher than the almost 3-year low it hit last week. Dollar yen was up 0.2% at 104.16. This is today's market news. Thanks for listening. We'll see you next time.